According to Cathie Wood, president of ARK Invest, Tesla stock might reach $500 by 2026. Even without robotaxi, the Tesla bull has previously set value targets for the company's stock, claiming that if the super cab is delivered, the targets may be met. However, based only on EVs, Cathie Wood is now even more optimistic about Tesla, predicting that the company's stock might reach as high as $500 by 2026. Could Tesla actually experience this? Let's investigate. Welcome back to Tesla. Tomorrow, everyone. Millions of shares of Tesla were recently purchased by Cathie Wood's investment company, ARK Invest, following the automaker's greatest daily decline in more than 2 years at $108.10 per share. Wood's flagship ARK Innovation ETF acquired 145,000 Tesla shares valued at $15.7 million, while ARK's autonomous technology and robotics ETF also acquired 31,000 Tesla shares valued at $3.4 million. Wood can keep increasing her stake in Tesla stock because she believes it has enormous purchasing power and presents a chance for Tesla investors. She asserts that Tesla can succeed without autonomous driving since the EV market is so vast. For what reason did Cathie Wood say this? Let's watch this video to find out. To keep informed about everything Tesla, don't forget to hit the notification bell, like, and subscribe before we get started. Given that she established some lofty price goals for the company's stock, Cathie previously asserted that Tesla will succeed with robotaxi. Wood stated in April 2022 that she anticipates Tesla's stock price to reach approximately $4,600 by 2026 if Tesla is successful in creating and implementing self-driving robotaxis. She continued, "This is feasible." The head of ARK Invest changed her Tesla price objective to $1,533 after the company's equity split 3-for-1, giving the situation a 25% chance in 2026. Cathie Wood predicted that Tesla stock will reach about $966 in a down market and reach as much as $1,933 in a bull market. But according to Cathie Wood, Tesla might still accomplish important goals without robotaxi. Sam Corris, director of research for autonomous technology and robotics at ARK Invest, mentioned Tesla's low battery costs, high drivetrain efficiency, and margins, making it one of the best-positioned companies to weather any cyclical lulls in vehicle demand. The Tesla bull recently referenced this tweet. He went on to say that Tesla may cut prices quickly, exactly like in the past, which puts pressure on other automakers. Furthermore, Tasha Keeney, a CFA at ARK Invest, said that even if autonomous driving and ride-hailing of any kind were eliminated, over 60% of Tesla's value would still be present over the following 5 years. This means that the company's 2026 valuation target, which they are currently aiming for, would be approximately $500 per share. Cathie Wood recently reaffirmed her faith in the EV manufacturer by purchasing additional Tesla shares on the day of the company's largest decline. Since September 2020, the price is currently down roughly 75% since November 2021, and ARK Invest's recent Tesla acquisitions coincided with a 12% decrease in the stock, the biggest one-day decline since September 2020. ARK Invest-backed funds reportedly purchased over 17,600 Tesla shares during this year's first U.S. trading session. The acquisitions coincided with a 12% decline in Tesla stock after the business missed quarterly delivery projections despite providing significant incentives. A little over 93,800 Tesla shares have been purchased by ARK ETFs since October 3, 2022. The electric vehicle manufacturer is the largest position in the ARK Innovation ETF, and the ARK Next Generation Internet ETF, accounting for 8.75% and 9.1% of assets, respectively. ARK Invest is one of the biggest investors in Tesla stock. The two funds collectively possess about $880 million worth of Tesla stock. Cathie Wood's continuous purchases demonstrate that the Tesla bull has high expectations for the EV manufacturer, and since the carmaker has enormous potential for growth in the upcoming years, there is little doubt that it will meet these expectations. Numerous factors, including new safety and vehicle emissions rules, technical advancements, and changing customer expectations, will contribute to the growth of the EV industry. Tesla's distinctive business strategy is largely responsible for the general enthusiasm surrounding electric automobiles. Tesla established itself in the EV market using a unique strategy and has long had a dominant position. Tesla concentrated on creating an appealing vehicle that would generate interest in EVs, rather than attempting to produce an affordable mass-market automobile straight soon. Innovation and producing innovative products are two things that Tesla is enthusiastic about. The stock market frequently rewards businesses that successfully take chances, and Tesla is no exception. Tesla made a full commitment to EVs, creating both aesthetically pleasing and functional vehicles, whereas traditional automakers took their time. Because of this, the majority of EV customers desire a Tesla rather than merely an electric vehicle. Musk has previously stated that Tesla nearly went bankrupt when increasing Model 3 manufacturing, but it managed to survive and turned into a huge success. Tesla has profited from robust profit margins in addition to the popularity of its cars. Compared to other automakers, notably BYD, which sells the most passenger EVs worldwide, Tesla has an astounding gross profit per vehicle. For the first time, BYD surpassed Tesla in 2022 in terms of total passenger EV sales, delivering 175,321 units, including plug-in hybrid and completely electric vehicles, as opposed to 573 EVs for Tesla. However, Tesla is far ahead in terms of net profit per vehicle sold. For the first 3 quarters of 2022, it reported a net income of around $8.87 billion, while BYD reported a net income of about $1.14 billion. Tesla made roughly $9,761 per vehicle, which is more than 8 times the $1.190 per vehicle made by BYD, according to Cathie, head of ARK Invest. Tesla will likely do well in the future since it prioritizes innovation and may reach a market valuation of over $100 trillion by 2030. Since Tesla is focused on innovation, it may do very well in the future. ARK has identified 14 disruptive technologies that are currently convergent and approaching a tipping point. All markets are already seeing price reductions from the company in an effort to increase sales in the face of declining demand in the biggest auto market in the world. Tesla recently lowered the price of its vehicles in China for the second time in less than 3 months. All models of the Chinese-made Model 3 and Model Y were eligible for the price reductions. Tao Lin, Tesla's vice president for external relations in China, claims that the company's price reductions are backed by a number of design advancements. According to her, Tesla is heeding the nation's appeal by taking proactive steps to boost economic growth and unleash the potential of local demand. In the meantime, production of Tesla's Cybertruck is getting closer. According to site records, the 9,000-ton Giga press for the all-electric pickup is reportedly being transported to the Gigafactory in Texas, just after a photo of the Cybertruck body prototype was seen there. Given this information, it would seem like Tesla is on schedule to begin producing Cybertrucks this year. In other news, Tesla became the top-selling vehicle in the UK for December, even when compared to automobiles with internal combustion engines. The electric SUV was the most popular vehicle in December, and the third most popular vehicle overall in 2022, according to full-year data released by the Society of Motor Manufacturers and Traders, with 10,664 Model Es registered in the UK overall. It was an impressive achievement. The Model 3 came in second with 5,700 for registrations. Tesla is still able to lower prices on some models to boost demand, despite worries about growing inventory levels for particular Tesla models, and the fact that not all Tesla EVs are eligible for new tax incentives. Tesla is able to boost prices and pass on increasing material costs to customers because of its strong concentration on electric vehicles and great brand. Do you believe that by 2026, Tesla stock will be worth about $500 per share? Tell us below. Click on the next video that appears on your screen to learn more about what Tesla has been up to in recent days. I'll see you there.